What's okay? So a little about me. Again, I'm Tamara, knows taxes. I am born and raised in Jamaica, in Connecticut, but I am Jamaican raised. So I have everything, all my traditions, everything is basically a Jamaican background. I started doing taxes at H&R Block. I'm a descendant of taxes because my mom used to do taxes. And she basically said someone in the family needs to know how to do this. So it was tag, you're it. So that's how I started doing taxes. I got my accounting degree after that. And then I started Tamara Knows Taxes because I just didn't like how some of these chain people were handling taxes, especially when it came to small business owners and people of color. So I decided to go on my own because I felt like there was a lack of education when it came to taxes. So that's why I started Tomorrow Knows Taxes. And a little about me, I love to travel. I love collecting elephants. And right now I'm working on my green thumb. I have a little plant in my house that's dying, but it's okay. We're going to bring it back to life one day. So before we get started, one thing I want to ask you is what are your tax prep goals? So if you guys are in the virtual room, please just put it in the chat. What's your tax goals? And we have 2 people in the room with us. So I'm just going to ask you guys to say your name. Jason Front. Jason, and what are your tax prep goals?
My tax prep goal for this year is to identify one or more deductions that I didn't identify last year.
Okay, perfect.
And my name is Tony Gonzalez, and I just started Grade Wolf, so we're a startup. And then my tax prep goals is to set myself up correctly. So I do.
Okay, so those are both realistic goals. So that's what we're gonna go over today. And Ray, what about people in the room?
Well, we can call on Nikki.
Yeah, we'll call on someone. So Nikki, what are your tax prep goals?
Just feel free to jump right in there, Nikki. What are your tax prep goals? Okay, maybe she doesn't want to speak, so that's okay. That's okay. But like I said, this is going to be an interactive meeting, so you are going to be broken out into groups. So just, if you're not talking now, just get to know the people that you're in the group with, because I feel like collaboration is important on anything we do. So if you don't know a question, you should always reach out to somebody and see if they know the answer.
Cody.
Oh, you said Cody had a,
Cody, is on the line. Maybe they can share their tax prep goals.
Cody, do you want to share your tax prep goals?
Yeah, sure. Mine are just to maximize deductions and figure out how to get set up properly. I'm also a startup, so first
Okay,
year in business.
perfect.
Okay.
So,
I think we lost Nikki and Natty.
oh, they was like, we're not talking. You calling my name, so I'm not doing this. So today the objective is for sole proprietors and LLC owners to know how to organize your taxes, categorize your financials, and then file your tax return, because that's what we're here about. I'm not gonna be here saying too much to you guys. I want it to be real interactive because I feel like people learn by doing. And how we're gonna do this is we're actually going to split up in groups. So Jason and Tony, since you guys are in here together, you're gonna be group members. And then Ray is gonna break people out in the room. How many people are now?
It's just Cody now, because I don't know if it's a bad connection or not, but there was Nikki and Natty. You want to join one of the breakout rooms?
I'm gonna join the group, so I'll speak with Cody.
Okay, perfect. So now we got even groups. So how it's gonna work is I'm gonna go over a lesson, and then you guys are gonna work on an activity based on that lesson. And then we're gonna do a little competition. So I'm gonna ask you questions afterwards, and whoever gets the answer right, you get the points for your team. And then whoever wins whoever has the most points at the end of the day will get a prize.
Can we share these documents in the chat?
Yeah.
Or can we email them to Cody? Cody,
So I emailed them to Isaiah, and he sent it to everyone today.
okay, so
So-
Cody, do you have the paperwork, Cody?
Cody, can you hear?
And I can forward it to Ray.
And sorry, Katanya, what was it that you had said about this?
I just wanted to make sure Cody has,
Oh, has
he's
stuff.
gonna be working with you, I just wanna make sure he has, yeah.
Okay, Cody, did you receive the paperwork, from us earlier today?
I'm in the wrong email. Keep doing this.
Well, I think Cody dropped.
No, we're in the breakout room, so
We're gonna break our room. Okay.
Oh, you can tell him to, because we're gonna go over everything first. And just bear with me. Okay.
Oh, you did? Yes.
Ray, what's your,
So he has the paperwork.
oh, he does.
So we're good.
Okay, then we're
Ray got
good.
Paperwork.
Perfect. Okay. So now we got our groups all settled. So we're gonna, like I said, we're gonna go over some lessons and then we're just gonna go over it because we're basically gonna get you guys prepared for the tax season. Everything that we're going over is the same exact thing you're gonna do when you're filing your taxes. So how to file a business tax return. So one thing you guys first should know is that, okay. Let me know when he's back.
And is there a time limit on this?
On the presentation?
No, on the exercise. Are you giving them 5 minutes or?
Oh, I was gonna give him like probably 15 minutes
Oh.
or so. Each one is like 15 minutes.
Oh.
Okay. So, first thing you guys need to know is if you're a sole proprietor or LLC, you are filing your tax return just like everybody else is. The only thing you're doing is adding a schedule to it. So, because I always get the question of, do I file my business return separately from my individual return? But no, you file them at the same exact time. So you're not filing them separately. The only time you file a separate business return is if you have a partnership or if you have a corporation. So that can be an S corporation or a C corporation. But when you have an LLC or your sole proprietor, you file it with your 1040 tax return. And this is the Schedule C that you're actually going to file it on. So what happens is the Schedule C is broken down to two sections. It reports your income and your expenses. And then it takes the difference, which is your net profit, and it reports it to the 1040 tax return. So basically, that's just a line item on your tax return, is just income on your tax return. And where to find income. So as a business owner, you guys probably take in different things like invoices. You might be using sales apps like Square, Shopify, anything like that. Though that's where you should be recording your income from. So the difference between a sales statement from a sales app and a bank account, when you deposit that money that you make from the sales app in the bank account, it deducts fees. So if you're looking at that income just from your bank account, you're not looking at an accurate number because it's not showing you the total income that you actually made. So when you're looking at income, you should be pulling your invoices. If you tracked it in QuickBooks or anything, you should be pulling those. So you pull all your sales apps. If you received any checks, and you didn't record and you didn't deposit them in your bank account, maybe you deposit in your personal account, you need to be getting all of those, totaling them all up. And I do recommend, if you have a if you're receiving checks and stuff, I do recommend that you guys use QuickBooks or some type of app to start recording your transaction, because it just makes everything easier at the end of the day. Okay? So, sales reports. So that's the first thing you do. You're pulling all your income. So you want to pull all your income from your sales reports, and you want to get the summary. So you're going to get the summary for the entire year, and you're looking at the income line. So that'll be for the Square, the Shopify's, the Honeybooks. If you do Wave invoices, QuickBook invoices, you want to get the total income. And you want to get the amount after discounts, because what they'll do is they'll have a line that says total income, and then they'll have a line that says discounts that you received, that you gave your customers, and then they'll have another line. So you make sure you look at the line after the discounts, because that's your true total. Again, bank deposits, that is not a true reflection when it comes from these sales apps, unless they did not charge a fee. But most of the time, if you're accepting credit cards from these apps, they are going to charge you a fee. So when you deposit this money into the account, it's going to be minus the fee. So it's not going to be a total income. Cash sales, you always want to make sure you're keeping track of your cash sales. So if you're selling something to a customer and they're giving you cash, always issue a receipt, because it's an easy way to track the income that you received. But if you didn't, you always want to record how much cash you received from the customer and for what item and what product. It's very important that you're going through your Cash App and your Venmos and your Zelle accounts, because one thing we know is people don't often transfer their money to their bank accounts. So of course, if you're not transferring the money, you don't even see that money hit your bank account. So that's sales that's missing. That's income that's missing. So you want to go through your monthly statements to pull all that out if you are accepting cash payments through those. One thing I realized about Cash App, they do it monthly. So if you guys aren't doing like QuickBooks or anything like that, this can be very time consuming, because you got to pull it month after month. Bank deposits. You always want to find the sales that's not included. That's not the sales app one. So if you deposited some checks, if you didn't record what the check is, you always want to keep a copy of the check, keep a copy of your deposit slip, any that thing that supports the income that you receive, you want to keep that. And like I said, again, exclude the sales app from the cash statements, from the bank statements. So anybody have any questions on that, on your pulling your income from your sales reports or your cash or your bank deposits? So everybody's good on that? So everybody knows how to find income? So this is going to bring us to our first activity. So what I want everybody to do is you're going to pull out the sales summary, and then online, what you're pulling out is the same thing. And then your the second document is named manual transactions. And you guys in the room is check deposits. So you're looking at the check deposits and the sales summary. So what I need you guys to do is add up the sales, the total amount of sales that you earned for the year from these statements. So it's the sales summary and the check deposits, checks and deposits. And then Ray online, it's sales summary and it's titled manual transactions. That's the document name. So I'm giving you guys 15 minutes to total up the total income that you received for the year. 15 minutes. And if you guys are finished before the 15 minutes, just let me know.
So question, we're operating under the assumption that those checks and cash are not included. in the sales system.
Correct.
Alright. Pull up the document. Alright, I put.
All right, feel better. And that's gonna be my second time doing it, and I have another. I don't know if they can hear, but I'm excited about that one. I revamped that workshop. It's gonna be so fun next.
I'll bring candy and stuff like that, like we can.
Okay,
Find folks and talk with to
get people awake. Mhm. Yeah,
I have an opening, so tomorrow.
Yes.
Repeat the direction. one more
yes.
time?
So you're gonna look at the sales summary. And I think it's called, I try to name them all the same thing.
So we have sales app and.
Yes, so that's it. So the sales app, you're gonna take the sales app in the manual transactions document. And you're gonna total up the amount of income that you received for the year based on these documents. I actually made a mistake myself.
Yeah, so the sales, so you really have to, open both documents. For the income.
My timer stopped, but
Alright, so we started with 25,000. 57.
Tony, did you guys finish?
We're getting there.
Okay. How about you guys? Did you finish?
So we're gonna compare this to the total collected, right? Is that what we're doing?
Nope, so it'd be the total collected, that includes taxes and stuff, which you do want to charge the customer, but it's the net sales. So it's either gonna be the gross sales if you didn't have discounts or the net sales. Yep. So we want to see our total that we made for the year. So how much income did we make for the year based on the checks and the sales app? Oh, shoot, and Cash App. Sorry. Cash App is in there. Sorry. Cash App is always so in there. And the Cash App one it just looks like this. It just says transactions. I knew something was missing too. That's my fault. See? And that's a part of taxes, because when you're doing your income and you're totaling it up, you're like, something's not right. I know I made more money than that. I'll do this with you guys just to make sure my math is right. Right, okay. And give you guys 5 more minutes. Okay. Your team is all set? Okay. Have a good night. Well, Ray, you're here. You're all set? Okay. So since it's just you two, so you can do whoever raises their hand first. So, but I'm gonna ask the question. So I already told y'all. What was the total sales for the year?
$757.22.
Nope.
I got 28,668.89 cents.
Nope.
Oh, boy.
So the correct answer was $27,683. and I'm gonna go over why. So the reason is, so the first thing was the sales app. So remember I said after the discount is your total amount. So the total amount that you're gonna be taking from the sales app is the net sales, which is the 25, 260, 14. So that's the total sales from that. And Jason, you missed it because I did miss a worksheet, so that was, so. But, and then the other transaction was on the Cash App transactions. So what I did not say was that you can do deposits into Cash App as well, like as in your bank account, but it's still, they're gonna deduct the fees. So you never wanna go by the deposits if it's a Square deposit or a Shopify deposit, but these customers are direct deposits from a sale. So that's the $250. So that's $500 from the Cash App.
The $250 charges,
Yep.
you can't add the 60 or the Square deposit or something.
Yep, because those were the Square deposits, and that's my fault, because I never brought that up when I was going over things. So when you do the Square deposit and the Shopify deposit, that's the same exact as if it was deposited into your bank account. They're gonna deposit it and take the fees out first.
But I looked at it, I saw Shopify, I saw Square deposit, Shopify deposit, and I'm like, well, are they depositing it?
Yeah, I that was my fault. I didn't go over that. So I whole missed this whole sheet. So I did trick you guys. So I'll give each team a point for that one. But the last two transaction was the invoice that they paid, which was the $1,500. And they did a pop-up purchase of $423.50, $423.50. So that totaled up to the $27,683. You guys want to note it, or before I move on or anything, or questions? So another thing is, it's better to have QuickBooks, any accountant app, because these apps will do the work for you. So when you have accountant apps and all that stuff, and you link them to your Square accounts and your Shopify accounts, it's actually totaling the sales for you. It calculates the fees, it calculates the totals and everything. So I do recommend you guys getting some type of sales app and connecting it to it. Go ahead. Jason, you had a question?
Yeah.
Yep.
So the sales tax on the sales summary,
Mm-hmm.
that's just us holding.
Yes.
Sales tax to be paid.
Yes, yes, unless you really didn't do it. If you really didn't do it, that's cash, that's income. But if you truly did take it to pay taxes, then it's not income. So just keep that in mind, because if you guys ever get audited and they say, did you pay your taxes with this? And you say, yes, they're expecting to see that come out of taxes. Oh, Ray. Hope I have my charger. I do. Where is
Right
the?
underneath the TV. Behind you.
Oh, okay. There's still no one online, right? Okay, good. I don't wanna. Okay, so we got that. Any other questions, guys, on that? So that was good question. So like I said, if you have accountant app like QuickBooks is really good at integrating these types of apps for you. So if you're integrated with it, it'll automatically calculate all the sales and the fees, everything for you, and it'll push them into the correct report. So all you're basically doing is clicking a report, and it'll show you all the sales and everything for you. So the way I'm showing you now is the manual way. This is how you would do things if you weren't doing any of this accounting stuff. Okay, so we're gonna move on. So let's move on to the expenses, because remember, that was the second part of the Schedule C, is income, then expenses. So now we go to the expenses. So it's very important that you're always getting all your expenses. I didn't go over the sheet yet. No. So when you're going over your bank transactions and stuff, you have to categorize your transactions in order to know what's eligible deductions and what's not eligible deductions. That's why it's very important to have the QuickBooks and the Waves and the accountant app, because you can connect your bank account to it and it'll automatically bring the information in, and it's easier to categorize. When you don't do that, you have to pull your yearly statement from your bank account and do it manually and even convert it to Excel and then categorize it that way. But it just becomes a long thought out process. But if you didn't do it, unfortunately, that's what you have to do. Transfer it to Excel or do everything line by line. Remember, it's always when you get amounts deposited, it's always the amount after expense. So you always want to make sure if you do have those apps and stuff that you are pulling these reports. You're going to pull the sales app report to get the fees off, because you want to make sure that's recorded as an expense. The payment apps, that's the same thing. Cash App is a monthly statement. So if you guys are using Cash App on a regular basis for your business, you're gonna have to convert it into a monthly statement to get all the transactions out, because you gotta categorize them. And then cash payments and cash receipts. Those are usually not recording anywhere. People usually buy stuff, have a cash receipt, and then they put it in a box. Those you have to record as well. If you're not doing it soon as you get the receipt, you should be at least doing it once a month and stuff, because no lie, I have a customer, you know those shopping bags, that Stop and Shop shopping bags? I had a customer give me a whole shopping bag filled to the brim with those. I charged him to do it, but think about how long it takes to do all of those receipts. And that was just a year. He gave me 2 bags. It was 2 years. So if you're operating in cash a lot, you want to make sure that you're recording your transactions. You can record those transactions in the QuickBooks and the Waves as well. So that's the next thing you have to do. You have to identify all your expenses. You have to pull them from your cash apps. You have to pull them from your payment apps to get the fees, the taxes as well, because you want to make sure the taxes is recorded somewhere as well. And your bank transactions, those can be your deposits. It could be check deposits. We see a check deposit here, right here, that was deposited in an account, but when you see it on your transactions, it's just gonna say deposit. You don't know what customer went to, what it was for. So if you aren't keeping track of that stuff, you need to be keeping track of it, because at the end of the year, if you're trying to find what does this belong to, it's gonna drive you crazy. So you have to pull all your expenses. That's how you pull your expenses. So we're gonna bring up to activity 2. We're going on to the expenses. So I talked about the bank transactions, and I talked about the sales apps, and I talked about the cash receipts. So what you guys are going to do is you're gonna take the sales app transaction, the sales app one that you were just working on. You're gonna do your cash app and your receipts. So it's gonna be the receipts, the sales app, and the cash app. And then there's a sheet right here that's called the transaction worksheet. Yours might say bank transaction if it's in your thing. Transactions worksheet. What you guys are gonna do is you're going to find all the manual transactions that's not a bank transaction, and you're gonna add it to the bottom of this list. So for example, I'll give you the first one, the Cash App transaction. It has that the person bought some supplies right here for $60. So you will write that down on the sheet. So anything that's not here, because these are all credit card and debit card transactions. So you're looking for anything that's not already here, that's not already automated in your bank. And you're gonna add it to this sheet at the bottom. And I'll give you guys 15 minutes.
Question.
Yes. Oh, good question. And I was supposed to write something up. I'm gonna say it's a bakery business, because you see the cost of goods sold. Yeah, it's a bakery business. So it's a bakery. So this person makes cakes and cookies and all that stuff. All right, if you guys have any other questions, I'll give you 15 minutes. Oh, there's people online. Oh, there's no one online.
No, but that's all right.
Oh, well, we're here. And I hope the people online are following these worksheets with this workshop, because you're not gonna know what you're doing unless you're looking at the worksheets. Yep.
So the last check on the bottom of 10/32/39. That's a business investment that someone made.
Oh yeah, these are all receipts where you bought something. Oh, you talking about the The bottom, so that's a deposit that you made into your own business.
Okay.
I did throw some tricks in there and throw you guys off a little. Not supposed to be easy. It's supposed to get you thinking. That's all.
So
The software does it for you.
thankfully,
So I'm only making you do math just because I want to torture you guys a little bit today. Ray, are you working by yourself? Oh. Okay. You guys didn't think you were gonna come here and have to work, huh? It's better than talking at you. And this one, you shouldn't have to total anything up. You guys all set? Oh, oh. Yeah, you shouldn't have to add anything up on this one. You just add in the transactions to the sheet. You guys got 5 more minutes.
You agree with me? I think so.
You guys are all set? Okay.
We just have one
Yep.
question. I see personal insurance. That's something that we should be accounting for.
We didn't get there yet. So all you guys are doing right now is just adding the manual transactions to this. So this is like if you were going to QuickBooks and you was like, okay, let me add in all my manual transactions. So that's all you're doing. So if you guys are all set, let me know. If not, you got 5 more minutes. You all set? Okay, so here comes the next question. So whoever raises their hand first. Ready? What was the total fees for the year? Go ahead.
Our answer is 5,087.
No, that's a large number. Where'd you get that from?
Adding up the transactions.
So you're not adding anything up. You're just adding the manual transactions to this. So you would just add the receipts in and just write it in here.
Okay, so we're only totaling up the receipts.
No, you're not even totaling them up.
Okay.
We're not totaling them up yet. We're just adding them.
So,
But I wanted to know, because if you caught that, you would know how much fees for the year.
so the fee, wasn't it 873.46?
Yep. Okay, I don't think, nope, there's no more questions. So you guys got it? So the other ones that you were adding in, so you were just writing it down. Yep,
So the only ones that I thought were missing were the three, supply, it was the supplies, a $60 supply. I think, so I don't know, that's what I'm like, I'm not sure if I.
yep, so you were adding, oh, you finished? No? Okay, so you were adding in the $60 supplies from the Cash App. And then you were adding in, the grocery store receipt for this 1997. Yep, the supplies, and then the computer.
Wait.
Oh, no, not the computer, because that was a debit. I did do that to throw you guys off. See, there you go.
Okay, 'cause I was gonna add that one too, but then I was like, oh, wait. I
It
saw
says
that.
debit.
It says electronics store, and I was gonna call it computer, but then I saw electronics store was the very last, entry at the bottom, for the same price. I was like, oh. Okay.
Yep, I do that to trick you
Okay.
guys. So it was sold, again, you guys were adding in the grocery store, the supply store, and the supplies, and the fees from the sales app. So the fees from the sales app was the $873.46, and then you add in the $60 supplies, the 1997, the 98.94, and that's it.
Honestly, I was like, I thought there was more missing, so I was like, let's see if this was anything 15 minutes. I was like, this is so long for like.
Nope, so you gotta think about it, so what? Yeah, all your stuff is gonna be all over the place. If you're not organized, your stuff is gonna be all over the place, and you're gonna have to figure out what you have. Because when clients give me their stuff, I have to make sure I'm not duplicating information. I have to make sure I'm not repeating stuff. So you have to do the same exact things for yourself. You don't want to double your amounts of money, especially income. You double your income, you're going to be paying more taxes. So you always want to make sure that you're pulling the right information and you're not duplicating it. So let's talk about the write-offs now. So you have to know, one thing you have to know is all of your expenses is not eligible write-offs. Just because you pay for it under your business does not mean it's a write-off under your business. Some things like personal insurance is not a write-off under your business, even though you're paying for it under your business. It's not a business expense. So when it comes to eligible write-offs, there are tools out there that help you. The IRS does have a deduction schedule out there. It's a big book of descriptions and stuff that they have that actually shows you the eligible write-offs under your business. But in order to modify it, I actually created a tax index. That's what I named it. And it actually has the common supplies that I actually see that customers, small business owners are buying and are eligible to write off. So I took all these, every time I get a customer, I add them to the list. So right now, this list is over 200 of transactions or different expenses that you can write off. So it actually, so if you like bought a pen, you can look under it and see pen, look for pen, and then under it, it'll tell you that you can deduct that under the supply category on your tax return. So it's telling you where to deduct it under your tax return. So it's just like you should be, when you're looking up what's eligible, you should be using some type of tool to show you what's the eligible. If you're not using the tax index, the IRS has a free resource as well. I don't have the schedule in front of me, but it does have the deductions on the irs.gov website. Just like I said before, watch out for the double reporting. The double recording, you always want to make sure you're not recording things in like your bank account and then you have the receipt and you record it all over again. You never want to do that. You don't need to calculate receipts if your bank card was used. If you have your transactions, your bank account and your transactions, it's already there. So if you have that receipt, you can just put it to the side and say, it's already in my bank account, as long as, the only way you would need it is to know what it was for. So, of course, you're gonna see shop and stop on your transaction, but you have to know that you bought bread or whatever, flour, eggs from Stop and Shop. So it's important to know that when you're categorizing. And one thing you always want to know, paying yourself is not an expense. Paying loans, paying credit cards, those are not expenses. Those are liability payments. So you never want to categorize those as an expense. Those are actually income, because it doesn't take away from your income. So anything that doesn't take away from your income is income to me. So paying yourself, it doesn't make your taxable income lower. Paying a loan, paying a credit card, it does not make your taxable income lower. So you couldn't count those as expense. And you also, as an LLC, a sole proprietor, you guys are not employees. You cannot hire yourself as an employee under your business. You have to be considered a contractor. Is because when you pay yourself as an employee, you're paying taxes under that. So it's looking like you're paying less taxes than what you should be paying. Because when you pay, when you're self-employed, you're paying an income tax and you're paying a self-employment tax. So if you're paying yourself as an employee, you're taking income from that self-employment tax that they would have charged you for. So that's like you're doing illegal accounting now. So you're not an employee. Just if you ever hear someone say, put yourself on payroll. When you put yourself on payroll as a contractor, not as an employee. Okay? So that's it. I think that's it with this topic. You just always want to make sure that you look at your eligible deductions. Before you do that, you always want to categorize your transactions. I always recommend doing that first, before you actually pulling out your write-offs. It's just because it's easier. You're doing all at one time. But if you already know your eligible write-offs, you can categorize your transactions in a way that it's already matching the eligible write-off. And I'm going to show you guys in a minute. So this is the next activity. So I'm going to explain it. So this is the tax index. So the bottom part is a part of the tax index. So this is the one that says Schedule C worksheet activity. So we're actually going to pull off our eligible write-offs. So based on this, these are our expenses and these are the eligible categories that they belong under. So what I want you guys to do, because you already wrote everything down on your bank statement, I want you guys to go through your bank statement and calculate all the eligible write-offs. So each one has a category. So you're gonna find all the supplies, total it up. You're gonna find all the capital expense. It says capital expense, but I just want to break that down. Capital expense is a depreciated item. So that means that's a item that you bought that has a useful life over a year. So when you buy something that's has a useful life less than a year, so like a pencil, you can claim it as a write-off right then and there. If you bought something like that has a useful life over a year, computers, a desk, laptop, camera, anything, those have useful lives over a year. So what happens is they break that down per year. So you're able to write it off a certain amount each year. It's a depreciated expense. So when I'm doing this activity, we're going to act as if we're not depreciating this. We're just going to put the total number in there because there's lots of different depreciation schedules. So I didn't want you guys to get caught up, but I do want you to know what's a capital expense or a depreciated expense. So that's why it's in there. The other one, cost of goods sold. Cost of goods sold is something that you bought in order to produce whatever you was making. So this is a baker. We know they're gonna buy eggs, flour, and stuff to make the cake. So that's a cost of goods sold. Labels is a cost of goods sold. Packaging is a cost of goods sold. Anything that you use to produce your product and give back to the customer is a cost of goods sold. So anything that you won't retain, you give back to the customer, that's a cost of goods sold. Travel, if you travel for business, that's pretty self-explanatory. Rent, pretty self-explanatory. Meals, it has to be business related. So use your judgment when it comes to reviewing this stuff. Hint, hint. Um, and then other, I just want to give you a heads up. Bank fees is not a category, but it is an eligible expense and it would be considered an other expense. So that's your other hint. So you're just basically gonna go through your bank statements. Remember, you already wrote down your manual transactions on here already. And you guys are going to total up your eligible write-offs based on this information. So I'll give you guys about 20 minutes. It's gonna take you a while to do that one. And that's why I had the little boxes next to it. So if y'all wanted to write it in the boxes, you could. Oh, sorry, there is one little hint. One of the receipts has something that's not eligible on there. Let me throw that out there because I did not bring that up and I did tell you to focus on 2 documents. So I should have said there might be hints in all of the documents. I should have said. Never easy. Life isn't easy.
One more question.
Mhm.
Withdrawal, do we know if that's personal or is
Which one?
it on April 14th? The $200 on bank statement. It's third from the bottom.
So we're gonna assume that it's a personal. Only because we already categorized everything. So we already went through our bank statement, we categorized everything and that's there. Now we don't know what it is. You don't know what it is, the IRS don't know what it is, they gonna audit you. So we're just gonna assume we don't know what it is. It's the personal. How's it going, guys? No, Ray, no giving up. You gotta file these taxes.
The worst they could do to me.
Just add on. So I'm gonna give you guys like 5 more minutes because I just realized the time. You are? Okay, perfect. Well, Ray gave up. So maybe you guys can answer this question. What was the total meals for the year?
Well,
Nope.
It showed a hotel restaurant for 60, but it's positive.
Oh, it's positive? That's me. That was my fault. Okay, it should have been a negative. So you guys are correct. You are correct.
So only
But if it was a negative, it would have been $30. Yes.
50%.
Yep, it's 50% of a meal and it's business related. So like
Fast food is not.
the fast food is not business related because they just went and got food. It's not nothing to do with business or anything. If you went down and had dinner with your a business partner and stuff and y'all discussed business, then it's 50% deduction. But travel is the 50%. But it used to be 100 a couple of years ago, but they bumped it back down to 50. Yep. And what was the category for the bank fee? And I already told you guys this before. No, what was the category?
Category other.
Yep. Okay, so here are the answers. Oh, no, I have one more question. Oh, this is a trick question. So can anybody tell me the net taxable income? That's a bonus question. I didn't even tell you to think about that. So that is the income minus the total expenses. Anybody want to try? So you got to add in that 30 though. Anybody?
So I have 24,519.85.
Close, close. About $100, about. I rounded a little. I'm gonna show you guys the total numbers on the next page.
It's probably, I mean,
Well, if it's up by 100, if it's 500, you pay more taxes. So if it's less, you pay less taxes. I'm gonna show you guys the answers. And just keep in mind, my income is wrong. So these are the answers right here.
24,620.
You were close. You are about like 200. So my number is, so keep in mind that income is wrong. That is a wrong number. It's really 27,683.60, but the net income was 24,468.60. So the cost of goods was correct. That was the 681. And does anybody know how we got that number? Yep. And the supplies, what did you guys get the 149?
I'm including that 60 from cash.
You did it? You did?
So we were at 205. Including cash out.
So what else did you count as supplies?
Staples,
Mhm.
paper, and supply store, $95 to go.
My math might be, hold on. But good catch with the candy bar. My number is wrong. Yes, your number is right. What number did you have? Yep, you were right. You were right. That number was right. That was wrong. What about depreciation? What do you guys get for that one? Yep. Yep. And you guys get the 601 for the travel. You got 600. Oh, so one thing I did, so I did not mention that before. So on the tax returns, yeah, they drop the cents and round up. So if it's rounded, that's why. But you're right, but it's just rounded up. And you got the 500 for rent. And meals, we already talked about that, the 30, and then the other was the 873.
Although we got 13.95. Who did you check? Check 425. I didn't know what that was, so.
No, remember that was the check for the 423.50? That was the income that we added in the first exercise. Are you looking at the banks?
The lot 10, check 50059, $425. That's the one we're looking at.
Yeah. But we don't remember, we don't know what that's for. So we wouldn't count it because if you didn't put it down, remember, you don't put it down, the IRS doesn't you don't put it down, they don't know what it is, you don't know what it is, so y'all just running in circles. So it's just important that if you guys are writing stuff and writing checks and stuff, you always record what it's for. You have a question?
73.
Yep. Yep. And I will fix this and send it to everybody again. Yeah, because yeah, I realized there was an error. So I will update it and send it out. So when they send out the presentations, you'll have the updated one. Okay. So this is how the tax return is gonna look. So this is what it should look like when you finish it. So this is what you're gonna actually have is the Schedule C. So it shows all your eligible write-offs, your income, your cost of goods sold, and then it shows your net income. And that's what actually gets reported to your W-2. So you're going to be taxed on the 24,000 that we said was the net taxable income. So the more write-offs you have, the less that number becomes. So it's always important to keep track of your categories and your expenses and your transactions, just so you can bring that number down enough. And again, you're gonna do the Schedule C as well as the W-2, and it goes right there on the W-2. So when you finish it, you'll see the amount reported right there. Also things that's gonna be added to the return is your W-2 income, if you have interest, pension, all that stuff. So that all gets added up together, and that's how they determine your income tax. So your income tax isn't just based on your net income for your business, it's based on your total income. So when you guys are estimating taxes, you should always estimate based on everything that you're expected to make, not just your business. So this is just a recap. So it's showing you the different types of income that you're gonna expect. If you are filing with a spouse, it's gonna be your combined income together. But if not, it's just gonna be yours. You're gonna have W-2, Social Security, like I said, sold stocks, dividends, pensions, retirement. And then one thing you also wanna know, you're getting charged the income tax, but what you're also going to be taxed on is self-employment tax. So self-employment tax is that tax that you pay quarterly. You always hear people talk about quarterly taxes. It's the same thing as income tax. You always pay those quarterly and you file it once a year. So that's what they're talking about. When they're saying quarterly taxes, they're usually talking about the self-employment tax, which is 15.3% of your net income. So just keep that in mind. 15.3, that number does not change. So whatever your net income comes is gonna be 15.3% tax on that, and you're gonna have another tax on your income. So that was the presentation. That was the workshop. So with that, how do you guys feel? Do you feel ready and prepared to file your taxes? Does this help? Anything confuse you? Feedback? Okay. I like to throw tricks and stuff in there to get you guys confused, but this, like I said, you just want to make sure that you have if you're not using QuickBooks or Wave or something like that, I highly recommend you guys start doing that. It just makes your life so much easier. It's easier to track everything and it's easier to do this. We just did everything manually just because I want to show you guys the long way of doing things. When I learned how to do taxes, I had to do it by calculator in hand. So it's just good to know where everything comes from when you're doing it. I always say, don't worry about math. The system does it for you, okay? You just gotta know if it looks right or if it don't look right. You always wanna keep that in mind. Always pull in your sales apps and everything because those have the fees on it. You never wanna miss out because that is an eligible write-off. Record your manual transactions. If you have the cash receipts, I always recommend doing it right away. If you don't, it's gonna be a nightmare at the end of the year to do it. And remember, you're completing your Schedule C, you're adding all the other income to it, and you're gonna file a 1040 tax return. So again, I'm Tamara Knows Taxes. I do coaching sessions because I'm doing it with Headco. I usually charge for them, but because you guys are in the class, it's a complimentary session. So if you guys are stuck on anything, have tax questions, it is a 60-minute session. We can talk about whatever you want to talk about. It's complimentary. I do highly recommend you guys taking advantage of it because you're here. Obviously, you need help with something. I'm offering for free. That's what I like to do. I like to help people. And, oh, that's a QR code. I thought it was up. I'm looking at two different screens. So any questions?
I have a question.
Yep.
So I use QuickBooks.
Mm-hmm.
Do you have a preference in terms of, bookkeeping, accounting, so forth?
I would say QuickBooks is my preference just because QuickBooks integrates with everything. So I just stick with QuickBooks because it's the app that recognizes other apps. So that's why I use QuickBooks. So even when people scale up, if they're starting with something like Wave or something, I'll say, you know what, it's time for you to move over to QuickBooks because it can't handle everything that you're already doing. So if you have QuickBooks, stick with it. Yeah.
I will say, I don't know, Clarissa is online. I don't know if Clarissa has any questions.
Okay.
She did, come in a little bit later.
Okay. And then I just want to point out, I did give you guys a checklist. That's one of the things that was included in everything. Oh, I didn't have it up there, but there is a checklist. It's just to keep you on track of what you're filing your taxes. If you have employees, it tells you what forms to file, what things you should pull in order to just get your taxes started. So it's just something to keep you in order to make sure you have everything when you're ready to file. Okay. All right. Thank you guys for joining. I'm Tamara Knows Taxes. You're welcome. And can we take a picture real quick? Thank you. I don't have a